Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, hoping everybody had an amazing trading day yesterday. I want to welcome you all to the Daily Market Commentary. Those of you that are new to the channel, please make sure you click the subscribe button below so that you get the daily updates as they are released. For those of you that are new to the channel, we look at the same futures markets every day, and we look at the same futures markets every day in order to gain consistency in identifying opportunities. Now, the thing to remember is that the lines that we draw on the charts, we leave them on the charts. Win, lose, or draw. Hold us accountable, holds you accountable, and lets you see how trades develop over time. So let's dive right into it. So yesterday was a pretty big day. For those of you that followed the Daily Market Commentary, we had talked about taking a breakdown from this level here. And so that breakdown was a very, very strong move. Now, I will tell you, we had a long potential setup down in this area here. And so this is where I closed the position off, took a small profit, and did not get back into the long. So in this case, I did not get back in on the long on this particular trade back up. However, if your risk tolerance allowed you to, you certainly could have tried the reversal and you would have gotten stopped out. But that's okay. You know, you got to be willing to take some of those small losses when they, as long as you caught the breakout on the other side. So all in all, wound up being a pretty good trade if you caught the short. If you just tried to pick the bottom and take the long, then you missed out on the opportunity. And so now what are we setting up for? Well, we had a short covering rally at the end of the day, but I do believe it was just that, a short covering rally. I don't really think that there was a lot of momentum in there, a lot of strength in there. I think it was just end of the day short covering. Wound up being a pretty strong rally there towards the end of the day, but that's really where the extent of that move occurred. So I'm gonna get rid of this line right now because we already took the short on this one, so gonna have to remove that one. And now our next level is way down here on the S&P. So could we get a breakdown out of here? Yeah, we could play very similar to what we had yesterday with another breakdown. When I look at this on the bigger time frame and move to the 4-hour chart, what you'll see is we're in a pretty strong downward trend. Our next decent level of buying opportunity doesn't come into play until right about here, which is that old resistance area on the breakout of that fair price value move. So let's see if that price does indeed hold up from this point forward. So looking into our crystal ball, we could get a slightly bigger rally at some point today. I will tell you, if yesterday was a really good trading day for you, today's a good day to take the day off. If yesterday was a really bad trading day for you, today's a really good day to take the day off. I think that we could get a big movement one way or the other today, but I'm not sure which way that can be. And so what I'm going to do is I'm just going to hold tight. I think discretion is sometimes the better part of valor, and that's kind of where I'm sitting at right now. I think we very well could get another thrust move down. And so while it's tempting to throw another breakout trade in like we had yesterday, I'm going to hold off on that because this is the kind of market when we've had a big move like this that sets up for false breakouts. I was talking to a couple of people on Twitter yesterday about false breakouts, and false breakouts do occur if you take too many breakouts. See, the key in breakout trading is what is the setup before the breakout and what's the room to roam. And right now, this setup before the breakout, to me, sets up for a breakout, fake out, shakeout. And so I'm going to stay away from it today. Looking at the NQ, I get a very similar picture on the NQ. We still have this area up here for a potential reversal in the future. But as of now, it's definitely lining up more for a breakout trade similar to the S&P. Now, the NQ, our level down here, this 6140, is really kind of our reversal point in this one. If I go to the 4-hour chart on the Nasdaq, we've not quite yet retested February's lows, but boy, are we getting there. We've had some fairly strong moves to the downside. Now, Amazon has really been our leader. Nasdaq has really been our leader. Amazon being kind of one of the catalysts for that, right? Amazon, Facebook. Facebook actually didn't have as bad of a day yesterday as a lot of other things did. Netflix, some of these darling stocks have had such a nice pullback that it is giving people reason to pause. There was a little bit of a Tesla move, right, as we're kind of jumping around. So we talked about this on the weekend edition of the Daily Market Commentary, for those of you that caught the weekend edition, and really it's what's leading that market to the downside. Let's move over to crude oil. So crude oil, we had a long trade set up right here. So depending on your risk tolerance, you may have gotten in a bit early. This is a dashed line, means I wait for price to come into the level and I get long as it comes out. So I did not catch this little move here. I still have the long trade set up. This is a, anytime it's a dashed line, it's more of a confirmation style entry. We wait for price to come in and we get long as it comes back out. I don't have as much confidence in it, I will tell you, because of our little bounce off of it right here. Now, this little bounce occurred at 3 o'clock in the afternoon. So really what we've seen is overnight market movement, which is done on lower volume. So done on lower volume tells me that there could still be some buying in this area down here. So I'm not dead on the level, and I'm not dead on the opportunity. But I also don't really want to add a whole lot of other trades to the list. So I'm going to leave this thing as we currently have it. Looking at gold. Now, gold, you may or may not have been stopped out on this gold level as price came screaming into the zone. We got a nice little bit of a reversal on that. So depending on your risk tolerance, you may or may not have been stopped out. I will say more than likely you're about done in this trade. If you're not done, I'm going to come down to here as a potential reversal trade right down this area. Remember, this was a breakout short. So if we get this bounce off of this area here, I'd be okay if this is just a tiny little bounce and then we come back down and then we get a breakout to the downside. So both of these trades are now in play. I'm going to remove this one as this one is no longer in play as we violated the area. So depending on how far you put your stops above your zone, you may or may not still be in this. If you're in this trade and you're still profitable, I would be taking your stop and at least moving it down to the last pivot high to lock in, to minimize that loss a little bit. And then if we put another pivot high in, then you move your stop down to below the next pivot high. All right, let's go take a look at the bond markets and our currency futures. So looking here at the bonds, the ZN, which is our 10-year treasury note. I know a lot of you don't trade on Thinkorswim. Maybe you use TradeStation or Interactive Brokers or Infinity or Global or TP Futures or with some of the many other futures brokers. They may or may not use the same ticker symbols, but this is the 10-year futures note. We've got a level of reversal possibly right in here. On the 4-hour chart, the slightly bigger time period, we have put in a decent basing pattern, a little bit of a basing kind of rolling rollover. I think there's a chance that we'll continue to march higher. I will notice, though, I will have you note that we are reducing our momentum to the upside. So I am not an indicator trader. For those of you that are here every day, you know that we don't do indicators very often, but I use indicators to tell me some things. And so one of the things that I use an indicator for is just to confirm my suspicions of momentum. Now, this is a momentum weakening trade. Momentum weakening trades typically are a sign for a reversal, especially when we have upper wicks like this. High upper wicks indicate a lot of sellers. The buyers are unable to hold on to their gains. Now, why do I see the momentum weakening? Well, let me throw in a quick indicator here. And I simply use MACD, which is our simplest momentum indicator. You see that we have higher swing highs in price, but lower swing highs in momentum. So here's the way I explain that for those of you that are fairly new to the channel. As you're throwing a ball up in the air, if you're throwing a tennis ball up into the air, as it's climbing higher into the sky, it's losing speed. Eventually, it loses so much speed that it stops going up and starts to go back down. And this isn't always what happens, right? I still need to see us break through some high probability buying areas before I would be willing to short it. But this is giving me the setup for a potential reversal. So just keep that area in mind. Looking at the Aussie, so the Aussie dollar, I think we could get a decent little reversal right up here. The thing I don't like about this area here is the time of the day that it was created. It was formed at a pretty weak time of the day. And so normally I would just wrap my lines around this area here. I'm going to extend it to the whole pivot. So this is a fairly wide area. So depending on your risk tolerance, you may or may not be able to do this level. If you're not able to do this level, you could put in just this area here. If you're not able to do the full level, you could just do the upper level. So it depends on your risk tolerance. But remember, you can always change your position size if need be. Looking at the euro, so the euro level met entry and then has started to come back down out of here. You may or may not have gotten filled. It's got to trade about a third of the way in for the level for me to get filled. This could be an example of being nicked by a tick and just barely missing out on the trade. I'm going to leave this line in here just in case you didn't get filled and you want to give it another go. I think that there's still probably some latent sell orders up here for you to take advantage of in the future. Looking at the Canadian dollar, our Canadian dollar, we also have nicked by a tick as it just came in at a level and boom, started to pop up out of here. So I'm going to leave both of those lines intact as both of them are moving our direction. Whether you got filled or not, I am not sure. Depends on your trading style and your own risk tolerances. On the Japanese yen, so this Japanese yen position, we still have our reversal areas up in here. We had talked about how there may be some sort of a breakout one way or the other on here. This is not when it just kind of folds out of the sides, that's not going to be considered a breakout of any sort of triangle. And this wasn't really a true triangle in its truest sense, but this is where we got the breakout out of here, and then we've kind of come back down into it. So this little move on this breakout from here to here did take us to our opposing fair price value area. So there wasn't a whole lot of profit in this one, and I'm going to move this one away. This is still, I think, the better reversal point if we can make it all the way up to this region here. I'm not sure that we will today or, frankly, even this week. I think that we're kind of range bound. But when you look at this on a 4-hour chart, you look at the yen on a 4-hour chart, we're starting to see lower swing highs and lower swing lows, and that trend is starting to make itself pretty evident in a number of locations. Looking here at copper. So copper, we actually bounced off this area here. I did not mark it. So it's one of those, I feel like a moron for not marking it, but I do feel like a moron for not marking it. But we hit it, moved down, hit it again, moved down less, hit it again. So this is not a reversal opportunity. This is actually turning into a potential breakout opportunity. Because we keep hitting it moving up. Now, my problem with it as a true breakout is that I do have some of this noise up above. So I'm not going to draw the line on here. If you're willing to take the risk, you can. I think there's plenty of other opportunities in markets that I'm not going to add this one to my list today. So a lot of stuff to cover today, but I'm going to kind of head back to our these are the 4 main markets, if you will, that I think most people are pretty actively trading. The key today is going to be, if you had it, and I learned this a long time ago from a really, really smart guy. He was a really, really big mentor of mine, and what he said was, if you had a really good trading day, take the next day off. If you've had a really bad trading day, take the next day off. Because what it does is it almost tricks you emotionally to get in when you probably shouldn't, one way or the other. Either you feel bulletproof or you feel like you've got to make it back up. Don't fall in to that trap, and I kind of feel like today could be one of those traps. I could be completely wrong, but once again, this is just me pontificating on my YouTube channel, so I'm certainly not giving you advice. You need to make your own decisions, and I could be completely wrong, but I will tell you today, in my mind, is a great day to play golf. If you've had a great trading day yesterday or a poor trading day yesterday. So no matter what your outcome was, if it was a big one, I think it's a good day to take a rest. But the key is to follow your plan. Speaking of following your plan, for those of you that are looking for investment management services, or you maybe know somebody who's looking for investment management services, do me a favor, shoot them my info. It's my email address is chuck@iiefinancial.com. The website is iiefinancial.com. I certainly don't trade people's accounts, but for investment management sides, and not everybody wants to manage their own big bucket, so you can certainly just give me a heads up and let me know if there's anything I can do to help. I know a lot of people are getting concerned, especially as we're starting to see a lot more volatility in the markets with what's going to happen overall with their accounts. So thank you so much, everybody. I hope you have a great trading day, and until tomorrow, peace out.